Frank, obviously a huge day for you. Congratulations. What's your take on how this went down, given that we are in the middle of a pandemic, lots of economic uncertainty? I'm sure it was a difficult decision trying to figure out how and when to do this.
Well, we're thrilled with the reception. We really started assembling our institutional ownership, a little bit over a year ago. So this is really not something of the last couple of weeks. We had people, buy into a tender offer we did earlier, January, February timeframe. So Snowflake is really a heavily vetted company. So by the time we got to the IPO, there was really high conviction into buying into the offering. So we're thrilled with the way things have gone this week.
So talk about conviction. Shares more than doubling. You priced at $120 a share, closed at $253. That said, you left a lot of money on the table. I mean, do you have any concerns that you've given the bankers a little too much here?
Well, the assumption is always that, we could have sold the entire offering at the number that we closed at. And obviously, there's such a thing as a demand curve. There's always investors that are, willing to, buy some number of shares at higher prices. But, as you know, the IPO is a price discovery process, and we were after a very specific set of institutional investors, people that can hold multi-billion-dollar positions that are willing to hold down for 5 to 10 years, and also people that don't chase momentum either up or down. So that's really how we landed at our price. It's not unusual for a price to get chased up by momentum players in retail and so on. So there's a lot of noise to it. So the idea that we could have sold the whole thing at the price that we closed at, I don't think is reasonable. So.
That said, is there a lesson here for some of the other companies looking to go out of the gate? We've got huge public debuts expected for, some other huge companies in Silicon Valley, Airbnb, Palantir. Any advice?
It's hard for people to price a high growth asset because high growth asset is going to how fast is it going to grow into its valuation, right? So you need to really do a lot of work with investors. Because they have to make a long-term bet, right? This is not a 12-month deal. People are buying in for 3, 5, 7 years, and they need to understand the story extremely well to be able to do that and have the conviction. I mean, one of the reasons, why the stock ran up and we were really delayed in trading is because we just had no sellers. People were just hanging on for dear life. So that sort of slowed things down a bit today.
Now, investors are seeing an opportunity here to disrupt Amazon because what you offer, it's basically your own version of a data warehouse. Amazon does have a similar product. What do you have on them?
Well, what we have on the whole industry is really a product that was built from the ground up, clean sheet of paper, by a group of people who were some of the world's greatest database technology architects, people that really understand the technology really well. Also, what it was lacking all this time. And, when it gets completely redesigned, reimagined for cloud scale computing, you end up with a completely different product architecturally. And something that innovates on multiple vectors at once. So you compare that to what other people are offering out there. They're all trying to carry legacy architectures, software designed for machine computing to the cloud, and they find out that they really can't take advantage of cloud scale, and that's sort of what you see going on. I mean, Snowflake is a deceptive product because it's incredibly powerful given the underlying platform, which is the public cloud. We only run on the public cloud, and we have zero legacy in terms of older machine architectures.
Now, Iconic is one of your biggest investors. Some of that firm's clients include Mark Zuckerberg, Jack Dorsey. Also, Berkshire Hathaway made a cool $1 billion on your public offering, despite the fact that Warren Buffett doesn't love investing in newly public companies, let alone tech companies. Has Buffett been at all influential, as the company has evolved? Has he had any impact on you?
Well, one of the reasons we started talking to the insurance side of Berkshire, well over a year ago, and they became more interested as the prospect of an IPO came closer for us as a company, the association and having Berkshire investor offering really lend a lot of credibility to Snowflake. And, we're a company that competes with the largest companies in the world. I mean, you mentioned Amazon, Google, Microsoft, and so on. And we also sell to the largest companies in the world. So for us to raise our stature with the likes of Berkshire Hathaway, as well as Salesforce, of course, is incredibly helpful. So, today was a pretty good shot in the arm in terms of advancing, our public profile in the marketplace.
Now, meantime, you are looking ahead to a very uncertain economic environment, an uncertain political environment. We've got what's going on between the United States and China. We've got a presidential election. How do you plan ahead with all of this uncertainty? What is your outlook for demand in the midst of a pandemic?
Ironically, I would say that the first half of the year was far more uncertain and unsettling, if you will, for our industry than the second half. The second half has really firmed up. And because of the types of things that we do, which is really, mass data analytics and data platforms, this is the sort of thing that enterprises need to figure out what's going on in the world. This is how they parse the reality. This is how they act on it. So if anything, it's been a catalyst for a lot of enterprises to really double down on analytics and data sciences and so on. So our business, has not dropped off. It's really ahead of where our pre-pandemic forecasts were. So obviously, we all had to vacate our offices and operate remotely, but we've gotten used to that as well, and seems to be working okay.